condominium is a sharing concept. The idea is that it starts with fee simple airspace, and airspace is the part of the property that is occupied by the tenant. The rest of the property is held as tenancy in common, that is, it's shared by everyone who lives there. So with a condominium, you end up with two forms of ownership: the ownership of your airspace, and separately, the shared ownership of the entire complex. This concept can be used in both residential and commercial property. So let's take a look at airspace in more detail. Airspace is wall-to-wall within the unit, and ceiling-to-floor within the building. The common area includes everything else. It includes land, the structure, including the exterior of the building, and the floor or ceiling between the floors that is shared by everyone on each floor. The systems, including HVAC and plumbing, electrical systems. The grounds, including landscape. And services, including parking.
The pro rata share is that portion, or that share, of the cost of operating the condominium complex that falls upon the individual airspace owner, the individual unit owner. It is a proportionate cost that is based on the ratio, the percentage, of the total complex that a particular owner owns. The larger units would pay a higher condominium fee in most cases. This is a statement created to illustrate the cost of one condominium complex compared to another. We have the standard Orange County condominium complex cost compared to Laguna Woods Village. Then, we are comparing down the list the various things that are included or paid separately by these two projects. Take a look at the list of items that are included as part of the condominium operating costs. They include things like hazard insurance, utilities such as cable, water and trash pickup, maintaining the exterior of the building, plumbing services, ground maintenance, bus services, swimming pool maintenance, and golf course. All of these things are included in the homeowners association dues associated with the property. In this case, $525 would be the proportionate cost of the condominium upkeep that falls upon the individual property owner. It's the common area maintenance charge, and it also includes taxes and insurance. That is, taxes and insurance for the building. Now, every condominium association also has a homeowner association. That is where the HOA come from, the homeowner association. So they are called the homeowners association fees or homeowner association dues because they pay for the management of the common area of the condominium association. What if you never use the common areas? You still hold tenancy in common for those areas and must pay the fees assessed by the HOA. If you want to know the details about this common area management, you should take a look at the covenants, conditions, and restrictions that are recorded with the condominium project. Those are frequently referred to in brief as CC&Rs. What type of ownership interest will you have in the condominium? You have tenancy in severalty in the airspace of your unit, and you have tenancy in common interest in the common elements, in the shared elements. This is part of the deed. In fact, if you bought a condominium, in some situations you would have two separate deeds for your percentage of the common area and your ownership in the airspace. In your own individual airspace, you can have whatever form of ownership you want, whether you own it all by yourself in severalty, a fee simple interest, or tenants in common or joint tenancy, whatever is appropriate for you. Your ownership gives you possession, use, and the right to exclude anyone from your airspace. Your airspace is very exclusive, just to you, as any private residence should be. However, you share the common elements and you can't restrict people from using those who have a right to be there. They may be an occupant of another unit in the condominium complex. However, the ownership can exclude non-owners from the use of the common areas. Can a condominium ownership be transferred, and can it be encumbered? The answer is yes, it can be transferred, and the transfer normally would be your interest in the airspace. It can be individually sold, it can be mortgaged, and it could be encumbered as with a mortgage. The common area, though, is a little different. It can be transferred, but what you transfer is your percentage ownership in the common area. The common area, because of its cost and the benefit to all the other parties, can become a lien against your individual airspace. But the common area is also included in the airspace when someone buys it. You can't sell the airspace without selling an interest in the common area. The sale of a condominium may require permission of someone else. Maybe a condominium board or the homeowners association may need to be involved in the approval. You would want to read the CC&Rs to determine if that would apply to you. Because the common space can become a lien on the property, it is possible for the HOA to foreclose if the owner fails to pay their assessed dues. That would also be outlined in the CC&Rs. Condominium taxes are applied against two important interests. First, they are against your individual airspace. This tax is very much like the tax that is applied to your individual homeowners. You also have a share in the tax for the common elements, where you have your piece of the pie. In this case, illustrating unit number 2 has their share of the total bill. In some municipalities, those two tax bills, the airspace bill and the common area bill, are combined into one tax notice. If you don't pay your taxes on your individual unit, on your airspace, the government can put a lien on your condo, and if the taxes still go unpaid, they can come and seize your condo for the delinquent taxes. This wouldn't have any effect on the other condo owners.
In order to get a condominium project approved with the municipality, you would need to file a condominium declaration. This declaration includes a legal description, use restrictions, the use of easements in the project, a description of the management organization, the voting rights that each individual owner will have, and a summary of the types of owner expenses that will be there and what their liability may be. And in addition to that, the CC&Rs, which describe the covenants, conditions, and restrictions that will go with the property. A cooperative is typically a parcel of real estate that's owned by a corporation. The tenants in the property typically hold stock in the corporation. So, as illustrated here, we have a 9-unit building. One of those tenants would probably be a holder of stock certificates, giving them 1/9 of the total project. So their ownership is in stock in the corporation. So in a co-op, the owner owns a stock interest in the corporation. That stock interest is considered personal property, and each share has one vote. The stockholders are then entitled to a proprietary lease. That is, because they are owners, proprietors, they are entitled to a lease to the property. The proprietary lease is used to pay the common charges of the property, such as common area maintenance charges, repairs and expenses, taxes, insurance, and any management fees. However, because the proprietor is a stockholder in the corporation, if one of the proprietors fail to pay their lease payment, the corporation still has the obligation, and so that obligation becomes shared among the remaining stockholders. So if one stockholder fails to pay their part, the remaining stockholders remain liable for that expense. A timeshare involves multiple parties with an interest in the property and the right to use it. Their interest in the property could be in the form of a lease, which means there is a single owner who holds a freehold interest, who then provides a lease opportunity to those who want to share the property in the form of a lease arrangement as timeshare tenants. Or in a freehold interest that would involve a deed. This would mean that each of the tenants would hold a tenancy in common freehold interest in the property. The management of the timeshare is governed by the covenants and conditions and restrictions that are established and recorded for that timeshare. Timeshares are heavily regulated by government, including the sale of those timeshares.